Data from financial firm Luthold Group shows that riskier assets like Bitcoin, meme stocks, and gold have outperformed a conservative portfolio of 60% stocks and 40% bonds in 2024. For more on the path forward for Bitcoin, I want to bring in Matt Kohrs, host of the Matt Kohrs Show. Matt, good to have you back on the program with us. Let's just start there. What is your anticipated path forward for Bitcoin now that we've notched and hit this milestone of 100,000? And now there's a larger question of, all right, well, how much further can we run and in what amount of time, most notably?
Always happy to be here. Thanks for having me on. I think a lot of this has to be looked at in one of two ways. In my humble opinion, what we have with Bitcoin, it's one of two things. It's either the best store of value ever created, or we're looking at another tulip mania that is maybe on the precipice of popping. I don't think the bubble is going to go that way. This is my own opinion. I think there's no middle ground. I don't think we're going to stop here. I think either going to zero or we keep climbing higher and higher and higher. Now, in the short term, your guess is as good as mine. We might as well just be flipping a coin. But in the long term, if this idea of a store of value and the US dollar always being devalued, I think Bitcoin goes higher and higher. So yes, I know that there's a lot of people making money on actively trading it, but I'm a much bigger fan of simply dollar cost averaging.
And so with that in mind, how would you be dollar cost averaging even on some of the milestones hit and then even on the pullbacks as well? Because even in that dollar cost averaging, it relies on you selling a little bit of your overall stake or your portfolio that you may have built up in order to then take some profits, buy back in at a lower level, assuming that there's going to be and hoping that there might be a pullback as well at some point.
So with that, I think there's two schools of thought. I think the easiest option is literally a day per month that you just pick and buy a small portion and just keep doing it, doing it, and doing it. Personally, for me, for people who want to feel like their fingers are a little bit more on the pulse, I wait for a certain percentage pullback from whatever the recent high is. But there's various models that show either of these historically, they're actually pretty close in terms of today performance. So I don't think that there's going to be much loss if you do any generic form of dollar cost averaging.
Certainly. What's the next major milestone or catalyst that you think that the crypto community needs to see in order for 100,000 not just to be justified, but for it to feel like we can move even higher from this point?
In terms of justification, I think that's almost the values in the eye of the beholder as we see inflation rip and the value of the dollar going down and down and down. I think we kind of get this backwards. I think people are viewing Bitcoin as it going up from the bottom left to the top right, when in reality, to me, Bitcoin is holding constant. It's actually the US dollar going from the top left down to the bottom right. I think the way we actually view the Bitcoin chart is incorrect. I am always betting on the US dollar going down, and it just seems mathematically, it's the mathematical sleight of hand that on a relative basis, Bitcoin's going up against it. So in terms of value, that's how I see it. In terms of next major catalyst, as the previous segment was talking about, yes, we're going to get a new chairman of the SEC, so that's going to bring new regulation. I think this is actually going to be a very positive time. In terms of value, I think there's going to be excitement at 2 and 2.5 trillion for overall Bitcoin market cap. But from there, I think the next big psychological level in terms of US dollar value will be 250,000, which I want to make clear, I do believe is very possible in the upcoming calendar year.
All right. One of the original meme stocks as well, GameStop, reporting earnings this week. Want to get your thoughts going into that print.
These times are always exciting because it's high risk, high reward. If you're on the right side of it, you can make money. Unfortunately, I've lived through this for the past 3 to 4 years, where it seems like a lot of people are maybe a little bit more too much in the hype side of it and not really respecting the risk. I'm not against hype. I think that community itself can add a lot of value. It does to a lot of stocks and cryptos and other things that we all commonly talk about. But I think it's one of those things where sometimes the excitement and that almost tribal group, it makes people where you don't respect the risk at all. If you look at the last 5 earnings from GME, a lot of the times it's just the premium sellers that end up winning because the move isn't that great. And then there's just a lot of IV crush. So for this particular earnings, I would say it's a crapshoot. To me, it's binary. We're flipping a coin and hey, if you want to play it, I hope you're on the right side of it. But to me, the money's going to be made in investing. And when I look at the entire total investable universe, GameStop's not really a top tier one because we don't have much forward direction from the company and the company's leadership at this moment in time.
I wonder what you make of at least the social chatter that seems like it's shifted from names like a GameStop to names more like a Palantir, names more like a Tesla, and how that ultimately you anticipate see playing out even further from here if you do see some of the investors that were in some of the momentum trades or the meme trades before start to get a little bit more interested in names that they can see a material move in tied to some type of actual fundamental activity that's taking place?
This is such a phenomenal question. I absolutely love it. My approach to the market, my mental framework is it's better when the long-term direction in your thesis is also in alignment with maybe potentially your short-term trend. So right here, what we saw the craziness of GameStop and AMC, that was an active trend going to the upside that anyone who understands fundamental analysis would never say that was a fair fundamental value. But once in a while, as you alluded to, with Palantir, with Tesla, you get this very excited group that's supporting it. But yet, when you look at the fundamentals of the company, they're also great. Palantir, if you look at its year-over-year, quarter-over-quarter growth, phenomenal. Tesla, right now, the FSD 13, the quality is great. The Cybercat. So to me, this is kind of that perfect storm of you get that retail personal excitement, but it's also backed by strong fundamentals. I think it's the best of both worlds.
Matt, thanks so much for taking the time here with us today. Good to see you.
Thank you.